the best thing. Right. But also, I mean, that's just what the textbook says. It's not the way it always is going to play out. And in these markets, I'll go to baseball where it's like, there's no such thing as momentum. If you get blown out one day, momentum is tomorrow's starting pitcher. You start the next day, and you see who shows up.
That's true, too. It's basketball time. March Madness, if we have it this year. But
we'll probably have it. You just may not, may not have a lot of crowds.
You can make baseball analogies.
Well,
it'll be on TV.
But let's finish this up first because it's been a great year anyway.
All right, we should tell you quickly, Goldman Sachs out with a new note over the weekend predicting that the Fed will cut rates by 50 basis points at or before its next meeting later this month, and an additional 50 basis point cut sometime in the second quarter. Goldman also says to expect action from policymakers in Canada, the UK, Australia, India, and more. I feel like I kind of knew that after talking to Kevin Warsh on Friday, too.
All right, join us now, David Albright, a five-star bond portfolio manager at New Fleet Asset Management, like $10 billion in assets. And really, in the last 3 weeks, you've been really, your moniker is Midas. I mean, you have been the greatest manager of money I've seen across the board of anyone I've had. Everything you've touched in the last 3 weeks is
Thank you very much, Joe.
Isn't it true? I mean, it's crazy. You feel smart?
Well.
You feel smart?
Unfortunately, the equity markets haven't done that well.
But let's talk fixed income. I mean, is there any area, I guess bank loans, there are...
Bank loans and high yield, which are the most equity correlated.
And they haven't done as well.
Well, I mean, high yield's off 1.5 points, loans are off less than a point.
What did you make in munis in the past month?
Munis, well, let me give you an example of what came. The muni market is seeing massive inflows. Last year, 93 billion record inflows, 30 billion this year. Buckeye brought a tobacco deal in Ohio. We bought the triple B tranche. It came at 100 off. Within 3 hours, it tightened 50 basis points. It was up 5 points. Insane. 25 times oversubscribed. It's sort of an irrational market right now. We think that if any market is full in value, high yield munis and munis. High yield munis are up 4.5% year to date, which is a little crazy, a little counterintuitive with risk assets trading off. It seems like there's an irrational exuberance definitely in the muni market.
Yeah, there's been an irrational exuberance in the bond market for 3, 4, 5 years. There's been so many times where it's like, God, I wouldn't dare to put any of my money there. And every time, no matter how long the duration, you would have done okay.
Yeah, I mean, treasuries are up 5.2%, high yield munis up 4.6%.
It's got to be that. This is it now. I got to be it now.
If you're late to the defense game here, where do you buy in the bond market, right? Because I think people right now are worried it's too late to get out of equities. We're down too much. I don't want to sell at a loss. It's too late to get into bonds. Where are the opportunities? Do you still buy corporates? Do you buy munis?
So, I mean, we've done it up in quality trade. We've been doing that trade for the last 18 months, so we're pretty well positioned. We bet on the consumer, so we've done jumbo mortgages, we've done a lot of asset-backed securities, which are extremely liquid, high quality, and now we have plenty of fuel for the fire. I've been taking an opportunity to fill out positions that just 10 days ago were expensive. QVC, Stations Casino, Ladder Financial, Neighbors Energy, Charter Communications. So taking gradual bits and pieces, we're a dollar cost averager, it's not all or nothing. If you're not in the market as of now, you should have some diversification. You should always be in bonds. But one thing right now is looking very, very good, Joe. Cash at 1.5% versus a 10-year at 1.06.
Does that last?
I'm not sure how long it'll last, but it does seem like an attractive alternative.
When you say what you've been buying, obviously that's on the corporate side,
yes.
Right? So that means assumingly you don't expect some nasty kind of erosion of credit conditions here. I mean, I'm trying to read how the credit markets have responded, because it seems like this has been mostly an equity-led mini panic.
It has. So, I mean, you got to be very careful. And to your point, active management and credit selection's never been more important. There's been a lot of fallen angels. We've avoided high yield energy, which is down 8.8%. We've avoided some of the blowups in emerging markets. If you were in Argentina, Ecuador, or Lebanon, those are off anywhere from 10 to 43%. And a big bet coming into the year we made is to stick with the U.S. dollar, the highest yielding G3. The U.S. dollar, if you look at currencies with the exception of the yen, they're off anywhere from 3 to 10%. So, you have to pick your places, pick your spots. But credit, watch very, very closely. It's a case-by-case basis. You don't want to be in an index if you're in, the more esoteric sectors, high yield and bank loans. You want to be able to pick credit.
Can I just ask both of you, does this feel like this type of situation where, okay, we've gotten scared, but it's a buying opportunity? Or does this feel like we've gotten scared and there's going to be more panic to come?
I'll answer that for the equity market. So we're down 12.8% from the high on February 19th. On average, the equity market is down about 14% every year. So 12.8 is still less than that. And I think if we if we aren't nearing a recession, so if you believe that we're not going to go into recession because of this, a bear market or a correction without a recession is usually about 15 to 25%. So we still have more room to go on the downside before I think we hit that bear market trigger and some of those algos come in and say, you know what, we don't deserve to be in a bear. I don't know that this is a time when jittery investors should try to throw new capital into the market, but I do think for the moment it's worth riding out.
Although a year ago, or maybe it's not a full year, when Dahlia or whomever was saying, wow, recession odds have gone from 25 to 45, and we were all worried about it, there was nothing there. There was you turn the light on looking into the abyss and you didn't see anything. If I turn the light on, I'm afraid to turn the light on now. There's plenty.
We need
the
some
coronavirus
data.
Could do it.
It could, but we don't have any data yet.
People not going out and spending money.
Absolutely. Right. Well, and that's the big worry, right? In the beginning, it was this is a supply side shock. And now that it's spread to developed markets that are dependent on services, dependent on consumption, it becomes more of a concern that this could be a
But the phantom recession that made no sense is no longer, I mean, I could certainly easily explain how it
Well, I think the issue is you were already at a relatively low level of nominal growth, and so therefore anything could knock it towards zero. People are talking
globally,
about globally, and here as well. But
with the unemployment rate where it is here, and
the unemployment is great, but that's
consumer confidence
bottoms before a recession,
right? But
what I'm saying is people are now talking about, well, maybe we get a technical, statistical recession here. You know, 2 quarters of near zero growth. That doesn't necessarily change the picture. I don't know if you think it's different.
So, for us, I have a buy list. I'm putting together a buy list. Where is things traded off in the bond market? Macau, some of the gaming names, which make sense, and MGM, Las Vegas Sands, a win, which is 72%.
Yeah, because Macau, their action was cut by like 87%
Exactly.
for the month of February.
And in China, we own some of the internet online gaming names, which have done extremely well. If you take a look at some of the cruise lines, the airlines, if you take a look at restaurants, retail, anything that's traded off, we have a buy list. We're not jumping with both feet. We don't think there's a recession, at least not in the near term. And we're taking a hard look at credits. So, that's what we do. We're relative value buyers.
Totally different what you do than, I don't know if I'd look at any of the stocks of those. I mean, the bonds maybe. But do we go under a point? I mean, we're only 1.06. Do we get under? We don't get under zero, but we could certainly be at 75, 80.
The Fed came out and told you the neutral rate we have right now is negative, right? Their Fed funds is at 158, inflation's around 2%, so their neutral rate is already negative. Negative rates haven't worked around the world. You have, 15 trillion of negative rates.
Right.
They haven't stimulated growth. They haven't stimulated inflation. They've allowed access to capital from weaker companies, and they certainly haven't helped you putting money in your bank account in Europe at a negative rate.
Well, we don't necessarily try to get there to do something. Sometimes it's just we end up there.
I would say the bias may be to the downside, at least for the short term on rates.
David, thank you.
Thank you, guys.
We'll stay with us. You're here for 3 hours.
I am.
3-hour sentence. What do second prize 2 3-hour sentence? All right. Thanks.
When we come back, preparing for an outbreak in the United States, we'll talk to health policy expert Dr. Zeke Emanuel. That's next. And as we head to a break, all 30 Dow stocks are in correction territory this morning. Barring this morning's rally, or depending on where we go, right now the Dow's indicated down by about 62 points. We've got 11 in bear market territory, down more than 20% from the recent 52-week highs. Names like Boeing, Exxon, 3M, and Disney. We'll talk more about this a little later this morning. Squawk Box will be right back.
This CNBC program is sponsored by Baird, a strong financial partner for 100 years.
Fidelity, online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
At today's Best Western, stay 2 nights and get a free night for your next stay. 1 night, 2 nights, free night. Book now at bestwestern.com.
as you sort of try and teach people how to succeed like a ninja, my big takeaway from here is believe in yourself.
It's very important to kind of refocus on the things that you do well. The same thing applies in finances as well. The reality is you've got to be disciplined, you've got to create habits, and you've got to figure out how to leave your ego at the door.
I think you can learn so much from your mistakes, but also from the mistakes of others. Go to your strength.
Does hair loss run in your family? Are you losing your hair?
You can now treat hair loss at home in just 6 minutes a day with a laser light therapy that's been clinically proven to treat hair loss and regrow thicker, healthier hair. It's called the Capillus Laser Cap.
Laser therapy is an FDA-cleared treatment for hair loss. What laser therapy does, it reboots that blood supply. It reestablishes blood flow, oxygenation. It's a very effective treatment for hair loss.
Using the cap is very simple. I sit pretty much right here, watch TV, and I have it on. It's completely comfortable. You forget you have it on.
I just put it on when I watch the TV, and I got my hair back.
I feel like it truly has changed the way I see myself.
If you notice it, do something about it. Don't wait, because the longer you wait, the worse it can get.
Get the results you want or get your money back. Payment plans are available.
Call 1-888-474-0056 today or go to trycapillus.com.
New overnight, China confirming 200 new cases of the coronavirus, and the outbreak is taking a toll on the economy there. New survey data showed China's manufacturing activity slumped in February. The Purchasing Managers Index came in at 40.3. That's the lowest reading since the survey was launched back in 2004. Japan, meantime, reporting 5 new cases overnight, and controversial school closures began there today for most of the country, creating childcare problems for millions of workers. Auto sales in Japan tumbled 10% in February as the virus outbreak led to production disruptions. And South Korea reported nearly 500 new cases overnight, bringing the total there to more than 4,300.
That's pretty amazing. Just all this. In China, you see Japan, the article that in Japan, the flu season is being minimized because people are washing their hands so much and staying home from work that the normal flu season that people are doing better because, and in that entire country,
Look,
how many?
Things like hand washing, let's do that all the time.
I know, I've started.
Thank you.
Okay, you're welcome. And then you hear China. That's such a bizarre story where you said, okay, 200 cases, all right, but the size of China and 200 cases, and yet you've got a PMI of 40, that's a disconnect. And shows you that fear is what's doing it, not the actual.
It's not fear. It's what China actually intentionally did. They intentionally shut down and tried to quarantine entire provinces because of it.
The fear of the coronavirus.
Maybe you only have 200 because you only went out to work. Maybe you only.
I understand.
Maybe you only 200 because you only tested 200.
But the number of new cases is not proportional to the economic damage that is being done, and it's the same thing that can happen here.
The economic shutdown is the type of thing that China did. That, by the way, most of us have been applauding them for taking these extreme measures because it meant that it didn't spread more rapidly to the United States.
My own point is that for the amount of cases that you have in a country like China, to see the economic damage versus the actual number of cases, I mean,
well, they don't have to be infected in order to come out of the workforce, right? I mean, they quarantine enough people. They don't all necessarily need to be infected. They're just not at work. They're not producing anything, and that's been the issue. And then you pass through. I mean, it kind of builds on itself. You pass through a certain area, and then those people can't go to work for a certain amount of time. So it brings, I mean, at some point, almost a third of the workforce out of work.
Well, if we have this type of damping of economic activity with 80,000 or 90,000 total cases globally, what happens when we have if we have a million cases? I mean, I don't see. Then it won't be as proportional because we've already discounted. It seems like we've already discounted a million cases.
You've discounted a lot of economic activity shutdown.
Yes,
for sure.
Exactly, and you just wonder, God, if we could get a quick therapeutic that could deal with the symptoms with people that get it worse than other people.
Would be great.
Then we may go back.
Eunice tweeted earlier today about how stem cell therapy supposedly worked in a patient who was very sick from this. So they're trying new things.
Go back to, was it FDR, the only thing to fear? We might go back and in hindsight say that at some point that I'm hoping, and then there's the zombie apocalypse scenario, which would be worse.
Well, let's bring in a medical voice to talk about this right now. Zeke Emanuel, University of Pennsylvania Vice Provost for Global Initiatives and former Obama healthcare policy advisor. Dr. Emanuel, thank you for being with us. It's good to see you.
Good to be here.
Let's talk about what you think right now, where we stand with this, what's likely to be the situation here in the United States.
Well, first, I would note that if you look at the NASA satellite nitrogen oxide observation over China, which tests, industrial production, car driving, it's virtually clear now. Nothing happening in China. And I think that leads you to the problems that was noticed. There is a lot of fear, and there are a lot of people who are worried. I think for any individual, as pointed out, the risk is low, but collectively, from a public health standpoint, there could be big risk. I think what we're going to see in the United States is we now have 80 cases, but as we test and test more people, you're going to see that number rise, double every day when we really get testing out there. We know that in Washington State, for example, it's been circulating in the community for at least 6 weeks, back to January 20th or something like that, and it certainly has been passed from person to person. We know that long-term care facility, there are going to be a lot of people who are probably infected. And I think, that does stimulate fear. This is a lot of psychology, as pointed out, but psychology does play a big role, as you know. It plays a big role on Wall Street, and it plays a big role in how people are acting. I've noticed at the University of Pennsylvania, the phrase, an abundance of caution. You're going to see that where people are going to say, well, maybe I won't travel to this meeting. Do I really need to go somewhere? And I think, you've seen the airlines, they recognize it. You're going to see this for all sorts of cruises, I think, are down for a very long time because I think people are they're cautious, and a rate hike isn't going to change that kind of behavior.
Zeke, you point out the long-term care facility there. We're focusing on that because, particularly for people who have underlying conditions, this virus seems to be a little more deadly there. That could be the worst-case scenario, to have it breaking out at a long-term care facility.
Yeah, so there are several things that we know put people at increased risk. Older people, probably the immune system isn't working as well. You've got comorbidities, that's other conditions like chronic lung disease, smoking, obesity, anything that compromises lung function, congestive heart failure. You're going to see that have a big effect on people. The data are that young people don't seem to often are asymptomatic or very mildly symptomatic. Again, in that Washington State case where a guy came back from Wuhan and passed it on, and they saw it pop up late February, and a teenager, he recovered at home, no problem. And so that's the scenario you're seeing. Let me remind your viewers, that doesn't mean that if you're young, it can't be very serious. It's just a very low risk of that, kind of like the flu.
It strikes me that because there's an incubation period of up to 14 days, and because we're just getting those testing kits out, any snapshots that we're seeing right now are basically snapshots of where we were a week or 2 weeks ago in terms of what this infection was. That may be the concerning part.
Yeah, the 80 is clearly a very substantial undercount, and it's just an undercount because of the testing, and that's probably true in China too. We don't know exactly what their protocol is. There's some suspicion of the data at the moment, but I think the main issue is get more testing out. And it does raise an interesting dilemma. Who do you test? Because if a number of people are asymptomatic, do you test people? We do need some sense of prevalence, which is what's it like in a community, say in Washington State, where we know it's in the community, what's the frequency there, and how many people will convert to a serious illness? And we just don't know that, given the fact that we've had all these problems on the testing kits. Hopefully they'll be resolved very soon, and we'll have a lot more widespread testing so we have a real handle on the epidemiology, who's getting infected, how it's spreading, and how much it's spreading to people, and what proportion of people are actually getting sick. That'll be very important for making prognostications about how bad this is. Let me just say one other thing. The president keeps talking about it's going to go away with the warm weather. That's possible, but it's also not possible. We don't know, and to make basis of policy on that, or to use that as a basis for policy seems to me to be a mistake. We need to prepare for the worst and not hope for the best and make our policies on the hopes. We need to be prepared that this might not go away.
What needs to happen in terms of that preparation? I've heard about shortages when it comes to things like respirators, to the masks, to any needs for the hospitals that might be there on the front lines. What needs to happen?
Yeah, so I think you're right. You're already hearing some talk about shortages, potential shortages of drugs. They're not here today, but soon they might be because of all the raw materials made and drugs made in China, and we need to prepare that supply chain.
Because of problems in China. Just to be clear, problems with the supply chain on China for those drugs.
Well, 90% of the raw chemicals come from China. So we need alternatives to that, and we need them pretty quickly. Also, that personal protective equipment. Everyone's focused on the mask, but it's not just the mask. You need gloves. You need the items over the gowns, over the clothing. And remember, you're going to need to change those quite frequently. As I point out, we have about 250,000 ICU nurses alone. Forget the doctors, just the nurses. If they're changing their mask 5 times a day, that's 1 million masks a day, just to give you a sense of the magnitudes and the numbers of things we're going to need. In addition, I think, and I've been saying this for a while, we need some hospital surge capacity. We don't know where hospitals are going to be overwhelmed. We just don't, there's too much that's unpredictable about this situation at the moment.
You're not saying that average people on the street need these things. You're just talking about what the hospitals need, right? You're not suggesting other people should go stockpile these things.
No. The average citizen should not go out and buy masks and gloves. That is not helpful. Wearing the mask is probably counterproductive, since we're going to either wear it wrong, take it off, not dispose of it properly. Remember, the coronavirus is in droplets. It's not just in the air. If you have a droplet and you just put your hand on the mask and then put your hand on your face, that's going to be a problem. I think, as was mentioned, get the flu shot. Make sure you have that to distinguish, so you don't get the flu. And if you do have symptoms, it's more likely to be coronavirus. Wash your hands a lot. Don't share utensils. If you're sick, stay home. And if you're going to go to the doctor, go to the hospital, the emergency room, call ahead to tell them why you're coming, because you're worried about this, so that they can treat you differently. You don't sit in the waiting room, potentially infecting other people if it turns out to be positive. And that, I think, is also, you're going to see facilities triaging people with different symptoms in different ways, so that we don't have cross-contamination as much as possible.
Dr. Emanuel, thank you. It's good talking to you today.
Good. Thank you.
And coming up, much more on the market impact of the coronavirus outbreak. An advocacy group, now calling on the NCAA to hold March Madness basketball games in empty arenas because of the virus. But first, Twitter CEO Jack Dorsey facing a new activist challenge. Details right after the break.
New York State is taking business to the next level, supporting innovative companies that will shape tomorrow, and building workforce development and tuition-free college programs to generate the talent companies need. With a $150 billion investment in state-of-the-art modern infrastructure and a nation-leading commitment to low-cost clean energy, New York is doing more than any other state to build for the future of your business. New York State, the state of the future. Learn more at esd.ny.gov.
There's nothing standard about you, so get the new standard in home security and automation. Introducing the all-new FrontPoint Home Security System. So simple, you can install it yourself. Control it with your voice.
Alexa, tell FrontPoint to unlock the door with 3791.
And with your smartphone, too. We monitor your home 24/7 from burglaries and emergencies. Visit frontpoint.com and get the free doorbell camera.
Guys come in all shapes and sizes. There is no normal erection for everyone, but there is a normal for you. If, like thousands of other guys, you find that your erection doesn't look so normal anymore, it could be an addressable medical condition called Peyronie's disease, or PD. A curved erection with a bump that bothers you is not normal and should be checked out by a urologist. Because you don't have to accept this as your new normal. Find a urologist at learnaboutpd.com.
I always thought it was me, that I was the reason all these diets never worked.
This is genuinely not a temporary fix. There's some serious psychology behind it.
I've been on Noom for 4 months now. I've lost 27 pounds, and I feel like I got my life back.
Visit Noom.com and lose the weight for good.
Day 1, 50 Peloton rides to start the year. Here we go.
Don't stop here, Peloton. Remember why you started.
Halfway there, just hit a 5-day streak.
What's that mean?
Means Daddy didn't quit.
I don't get it.
Almost 50 rides. Boom!
We did not wake up to be mediocre today, Peloton.
Okay, it's just another meeting.
Come on. You didn't wake up to be mediocre.
Did you know a lot of medication sold online may be counterfeit? That's why we created Roman. Just visit GetRoman.com, and if treatment is right for you, you'll get genuine medication delivered to your door. Get started today at GetRoman.com/TV.
You ever get the urge to go a little crazy? You know what I'm talking about, right, Karen? Huh? You want to let yourself whoa, but you can't do it here or here. It hurts more when you fight it, but totally cool here. Wow. And here. Oh, yeah.
Whoa, kid.
She gets it. Get it all out. So when you're ready to let yourself whoa, there's only one place to go. Universal, baby.
There's no furniture at all. Yeah. Len needs to understand that we have a job to sell his expensive house and not his art. This is not a house for everybody.
Listing Impossible. All new Wednesday at a special time, 9 Eastern. CNBC. Get yours.
Good morning. Welcome back to Squawk Box. If you are just waking up, take a look at the U.S. equity futures. When we started just over half an hour ago, we were looking at the Dow futures indicated up by about 70 to 80 points. Right now, the Dow is indicated down by about 149 points. And believe it or not, these are minor swings given what we've been watching overnight. The move from the Dow has gone about 1,000 points as we've been watching pressure and then rallying back from it. We'll continue to see what happens. But the S&P 500 right now indicated down another 20 points. The NASDAQ off by 33.
And multiple media reports say Elliott Management has taken a roughly $1 billion stake in Twitter and nominated 4 directors to the board. Elliott, which is known for its activist campaigns, has been in talks with Twitter's management about its desire for the company to find a full-time CEO. Twitter's Jack Dorsey is also CEO of Square, of course, and he said last year he plans to move to Africa for 3 to 6 months this year.
There was a lot of talk over the weekend about whether this was a political move because just connections with the president, but this seems like a pretty easy one. When the CEO has 2 jobs and he says he's moving to Africa for 3 to 6 months. Right, that seems like it was a pretty easy target. By saying you're going to go to Africa for 3 to 6 months, easy time for one of these guys to step in and say, let's pay him a little more attention.
And of course, Square is a big company now. Yeah. I mean, when it first started, it was kind of, this thing I have on the side that maybe is promising. And so it seems like it's at least one job to run that company.
All right, coming up, Wall Street veteran Peter Krause joins us to try to make some sense of the worst week for the stock market since the financial crisis. That's next. And a reminder, you can watch or listen to us live on the go on the CNBC app. We're coming right back.
Through the AT&T network, edge-to-edge intelligence gives you the power to see every corner of your growing business. From finding out what's selling best, to managing your fleet. To collaborating remotely with your teams, giving you a nice big edge over your competition. That's the power of edge-to-edge intelligence.
When you really philosophize about it, there's only one thing you don't have enough of. Time is the only truly scarce commodity. When you come to that realization, I think it's very important that you spend your time wisely. And what better way of spending time than traveling, continuing to educate ourselves and broaden our minds.
Viking, voted #1 by both Condé Nast and Travel & Leisure readers. Learn more at vikingcruises.com.
What if you invested $5 a day, every day, and you invested the spare change from everything you buy? And what if your market returns were reinvested automatically And imagine if you did this for a while, so your money could grow. And what if all of this was easy?
Lead or be left behind. April 1st and 2nd, CNBC's At Work Summit. Insights from the most influential voices defining the future of work. Register now at cnbcevents.com.
Does hair loss run in your family? Are you losing your hair?
You can now treat hair loss at home in just 6 minutes a day with a laser light therapy that's been clinically proven to treat hair loss and regrow thicker, healthier hair. It's called the Capillus Laser Cap.
Laser therapy is an FDA-cleared treatment for hair loss. What laser therapy does, it reboots that blood supply. It reestablishes blood flow, oxygenation. It's a very effective treatment for hair loss.
Using the cap is very simple. I sit pretty much right here, watch TV, and I have it on. It is completely comfortable. You forget you have it on.
I just put it on when I watch the TV, and I got my hair back.
I feel like it truly has changed the way I see myself.
If you notice it, do something about it. Don't wait, because the longer you wait, the worse it can get.
Get the results you want or get your money back. Payment plans are available.
Call 1-888-474-0056 today or go to trycapillus.com.
You probably are aware of this, at least viscerally. It was the worst week for Wall Street. Felt like it since the financial crisis. Dow fell more than 12% in total as investors brace for another turbulent week. U.S. equity futures at this hour have now turned negative. When I woke up, we were up about 400 points. There have been a 1,000-point swing. When we came in this morning, we were still positive. We're negative now. Tough to see a lot of bounce unless the 10-year finds a footing. The yield, I'm talking about not the bonds itself, they've found more than a footing. Anyway, joining us now, Wall Street veteran Peter Krause, CEO and chairman of Aperture Investors. And Peter, we're not looking for you for the dire forecast. In reading your notes, although you think there will be some time remaining for us to work this out, but you point to China as having, and they maybe can do more draconian things than we're able to, but you think they're on the other side of the crisis at this point.
Well, I think that China has shown a tremendous amount of discipline in quarantining their personnel and the people in their cities. And, one of the things interesting about this virus is we don't know a lot about its mortality rate. We don't really know a lot about how fast it infects people, although it appears to be quite contagious and reasonably deadly, more than a general flu. But one thing that seems to be interesting is that China seems to have some success quarantining. And that may be a model for the rest of the world as the virus continues to spread.
Well, you're pointing out...
Economic impact of that, however,
that's what I mean.
Is that the economies will slow. And the market's reacting to that.
Right, but you're pointing out that then that's what we've been saying. The how bad it gets in terms of the human cost is one thing, but how bad it gets in terms of just dampening economic activity, having everyone stay home, whatever, that's a totally different thing. But you say in China... It was 3 months, and you think factories are beginning to come back to work, not at full staff, but, I mean, is that an inflection point? Is that a second derivative? We
do know that...
It's not going to go the other way and close again.
It could. We know these viruses have waves, and this could have a second wave that could be significantly more challenging than the first. But we do know that factories are coming back on stream. We know they're not fully staffed. We know the economic activity by looking at general gauges is not anywhere near what it was, but we do know that production has started.
But you see the volatility in our markets continuing, but you actually put an outer range on what you feel, and that's dangerous, and I don't know if you want to, but you're saying maybe another 2 weeks, maybe another 3 weeks.
I think it'll take 2 to 3 weeks for us to understand better what the mortality rate is and the speed of infection. It'll also take that long for us to understand whether quarantines are working or not. That'll give us a much better gauge on how long this economic growth will be affected.
We're probably trying to make test kits as quickly as possible. We're going to try and deploy those as quickly as possible. There's also someday, maybe before a vaccine, but some hope for maybe something that works to ameliorate the
Yeah, but the vaccine's not available until 2020.
But a therapeutic could be available much sooner.
Yeah, I think we're going to find that medical capability is going to expand as we get to know this virus better. Things will get better. The thing we don't know is what the second wave will bring. and what the impact of that is. And as I say again, we don't know the effect of quarantines. If quarantines work, then we're going to see more of that around the world, and that will affect economic growth.
Isn't it safe to say that they haven't worked already, though?
No, I think it's not. I think actually quarantines have worked. It slowed the virus. It's a difference between working, like wiping it out. That's not going to happen. But slowing it so that the rest of the world has a chance to actually catch up is really the value of the quarantine. And I think that's what China proved. And you're seeing it in northern Italy as well.
I mean, it's a rounding error. The number of cases now compared to the population of the world is I mean, you need scientific notation to go out far enough to get to where we are when you're talking about 90,000
Well, if we actually had counted them all, we don't.
You're right. But that in and of itself is a positive. If there's some you're missing totally because they're asymptomatic.
Yes. Or this Bill Gates' piece in the New England Journal of Medicine on Friday that this could be the once-in-a-century pathogen he's been worried about, simply because of the way it transmits, because it doesn't kill the host immediately. It makes it much more likely to go viral.
Yeah, to Becky's point, Wellcome Trust put out a research piece last week that was actually pretty dramatic. They said the mortality rate was between 0.5 and 1%, and they said 30% of the world population is going to get sick. That's 2 billion people. 2 billion times 0.5 is 10 million dead. That's a big number. But that's going to happen over time if it happens. And I think the economic impact is really the effect of what the quarantining does and the slowdown to the growth. And look, the bond market, as you point out, is actually pretty dramatically impacted. The 10 years around 1%. It's fallen 55 basis points.
Crude's at, 44 today?
Again, demand. So, there's not, it's not as if in the economic world or in the financial world, there aren't reasonably clear signposts that there are serious stress out there.
With so much that we don't know and won't know for a little while anyway, it seems like, we're not necessarily waiting for that magic advance. It's more the market has to reprice to a point where the most probable outcome is okay. In other words, it's an upside surprise.
I think that's a fair point. Two things are likely to happen. Either the market continues to be volatile, goes up and down, looking for some kind of balance as the world clarifies, or it dramatically declines to a point where it's so cheap that it won't go down any further. I doubt the latter. I think it's much more in the former, where we're going to continue to see market volatility. It probably heads further south as there's lack of uncertainty, but that will clear up over time.
Peter, what would be a dramatic decline?
Well, dramatic declines that we've seen in the past, whether it's 87, 2000, 2008, peak to trough is 50%. That's a big move. You're down to 1,700, and that could happen.
Wow, that'd be back to where you got out of the market.
No, 2,600.
No, you were 2,200 on it.
26.
You were here at 2,200. You were saying we're going to go back to 2,200.
Well, 2,200, that would be a...
All right, let me ask you. So there's nothing to fear but fear. So that's what we're hoping the eventual outcome. That could be with the actual human cost, but not the economic cost. The economic cost could still be very, very fearful, even if we do dodge a pandemic bullet, so to speak.
What I'm trying to say is that the quarantining, which seems to be having an effect, will likely reduce the impact on humans, but it may actually exacerbate the impact on the markets.
Right.
All right, Peter.
By the way, the Dow had gone down 80% by the time FDR said the only thing.
Yeah. It had?
I mean, it was 28 to 32, 29 to 32, and he said that in 1933. So,
but correct me if I'm wrong, but it came back, right? Eventually,
it did by the 50s.
Because
the great thing about equities is they go up over time.
Right. You wait long enough.
There you go.
I'm along watch bands. That's all I know whenever you come in here. How many you got?
I have a few.
Do you have 20?
Probably.
Probably have 20.
Yeah.
So cool. It always matches the ties. If you see, this guy is a B-A-N-D-Y with a capital D. You are
you could do this yourself. This is not hard.
Why do I need to? I have two different colored socks on.
Commenting on them so
much. I have two different. That's because you have something I don't have.
All you wear is gold. I mean, you could get a pink watch band.
I'm working on my socks, matching those in the morning.
Have you got
and remembering underwear? So it's all anyway.
I'm not going there.
Thank you, Peter.
All right, when we come back, a look at which stay-at-home stocks are avoiding the pain from last week's sell-off. We will have those names next. And right now, as we head to break, take a look at the biggest pre-market decliners in the NASDAQ 100, and that is led off by American Airlines right now. We'll be right back.
Don't forget to subscribe to our podcast. You'll get interviews, original content, and behind-the-scenes access. Look for us on Apple Podcasts or on your favorite podcast app. And subscribe to Squawk Pod today.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades, plus quality trade executions on our powerful platform. All from the only firm that offers a satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
We see homes staying cooler without the planet getting warmer. At Emerson, when issues become inspiration, creating a better world isn't just a result, it's a responsibility. Emerson. Consider it solved.
My hair loss was a reminder of my age. Like, is this happening to me now? When I started first seeing results, I got excited. I love my new hair. It makes me feel a lot more confident. The things I love about Roman are the simplicity, the confidentiality, and the fact that it works.
It's just a quarter, right? But what if Acorns automatically saved that quarter every time you bought coffee for a month? What about a year? 10 years? And what about the change from food, movies, parking, gas? What about the change from everything you buy? And what if Acorns invested it all in the market where it can grow through the power of compound returns? What if you didn't have to change your life to change your life? Then it's not just a quarter, is it?
Our retirement plan with Voya gives us confidence.
They help us with achievable steps along the way, so we can spend a bit today knowing we're prepared for tomorrow.
Wow, Dad. Do you think you overdid it, maybe?
I don't think so. What do you think, Peanut?
Nope.
Honey, you think we overdid it?
Overdid what?
See? We don't think so, son.
Technically, grandparents can't overdo it.
That's impossible.
Well planned, well invested, well protected.
Voya. Be confident to and through retirement.
I like to buy hysteria, not sell it. I like to buy panic, not sell it. We are trying to make sense of things for you here tonight in the face of this incredibly difficult but panicky tape. Watch or listen live on the CNBC app.
Does hair loss run in your family? Are you losing your hair?
You can now treat hair loss at home in just 6 minutes a day with a laser light therapy that's been clinically proven to treat hair loss and regrow thicker, healthier hair. It's called the Capillus Laser Cap.
Laser therapy is an FDA-cleared treatment for hair loss. What laser therapy does, it reboots that blood supply. It reestablishes blood flow, oxygenation. It's a very effective treatment for hair loss.
Using the cap is very simple. I sit pretty much right here, watch TV, and I have it on. It's completely comfortable. You forget you have it on.
I just put it on when I watch the TV, and I got my hair back.
I feel like it truly has changed the way I see myself.
If you notice it, do something about it. Don't wait, because the longer you wait, the worse it can get.
Get the results you want or get your money back. Payment plans are available.
Call 1-888-474-0056 today or go to trycapillas.com.
I do.
The Dow losing more than 3,000 points last week as coronavirus fears hit the markets. But some stocks are still performing well compared to the broader market as people start to work from home due to the virus. Joining us for a look at where some of the safe havens might be in stay-at-home stocks. Mark Mahaney, lead internet analyst at RBC Capital Markets. And Mark, I guess I'll start off by saying, do you buy into the premise that there'll be enough change in consumer behavior that it gives a tailwind to certain types of internet stocks and other stay-at-home stocks?
Okay, well, good morning, Mike. I hope not, but to the extent that there are assets out there in the internet space that would benefit from people cocooning, people staying in for entertainment, there's a couple of names that come to mind. The most obvious is Netflix. I also think social media stocks like Facebook, which would be sort of a form of communication, connection, a little bit of entertainment and information. I think that would be an obvious beneficiary as well. There's a few other social media stocks, maybe Twitter as a news service, maybe a Snapchat, and then maybe a music name like a Spotify. All of those would kind of fall into the cocooning beneficiary camp.
Now, I mean, Netflix has certainly held up. I mean, essentially, it's retained its value through this whole sell-off. And I guess as somebody who covers it, would you really think that this would be a driver of incremental new subscriptions? Or is it just essentially people saying, look, at least I'm buying something that's not going to be disadvantaged by what's going on?
I think it's probably the latter more than the first. At least you'd probably stem churn. This is if you're uncertain about your ability to find other entertainment, live entertainment options in the next month or two, you're probably going to be less likely to churn at this particular point, irregardless of the content slate. I think that would be the win, the small win for Netflix in this environment.
In terms of what have been tagged as potential losers, Uber, Lyft have been weak. I mean, everything's been weak, but there's a story out there that just going out less is going to hurt volumes. And would you see that as something that's going to last for a little while, or is a pullback in Uber something worth trying to play?
Yeah, so if I switch and think about the internet companies that we cover that are most exposed on the negative side, Alibaba's at the top of the list. The travel companies like Booking and Expedia, both of which have warned pretty draconianly, disastrously, whatever the word is, about the March quarter results, maybe going into the June quarter. Amazon and eBay companies that have supply chains into China, and then Uber and Lyft. Uber is, both of these companies get about 15% of their rides from airports, either people going to airports or people coming. So clearly they're a negative derivative of anything that shuts down travel. A little bit